Hi everybody, this is Gary Dean and this is our weekend video report for Sunday, June 5th, 2016. Hope you guys are having a fantastic weekend and let's get started. Saw some selling. It actually accelerated on Friday and up until we made it to the important level. Both sides know the importance of this 2085, and we saw buyers step in and push things back up to where the S&P was only down 6 points, but it was down almost 20 at one point. My take is they can only bump, think of it as let's say a sheet of ice. And when you jump on it, what happens? Eventually, you're putting fractures into this. And when it breaks, that's when things, that's when you really see the momentum pick up on the downside. But until the 2085 is taken out, the bulls are in control, and we've seen them buy each time. Now we have this this bearish wedge right here that we broke up. It looks like we possibly did a back test there. This is looking for a move to come down to the 2065. If we look at the hourly chart, we're still looking at 5 waves up on it, and the next move, which would make the most sense, would be anywhere from a 50 to a 78% retracement, which would give us the target of the 1960 to the 1874. But as I said, until the bears can push it through the that 2085 level, things are dangerous, but the bulls are in control. I wouldn't be buying into this rally just because we're seeing sellers that are stepping in as well. Now, another thing is we're still, even as frustrating as it's been, these past couple weeks on the upside, we still have not made any kind of higher high. So this pattern is still in play right now. It would, obviously the bears would need to step in pretty quickly because they don't want it to get above it, because then that would eliminate this pattern. But as of right now, it is still in play. You have bearish divergences on the weekly charts. We never really did any type of, let's say, recycle where they got things into deeply oversold levels and we had panic coming in. They got it low, but nothing like it where it's been in previous times when we had big moves. So I still think that this bearish divergence here is it's should be not make you comfortable if you're just gonna look long this market. I just think that they can pull the rug out whenever they want, and this thing will just crater 100, 200 points in a matter of a week. It's being held up by algorithms that are buying at the 2085 level. Once that gives way, then we're in an area where the bulls have not really ever been tested since February. And this is what happens with them when they do these extended moves, is everyone becomes very complacent, and when all of a sudden they have to start defending, they don't do it, and we see moves like this take place. So if we take a look at our internal charts here, and this chart still stands out to me. This is the VIX and the S&P. You can see the S&P is in the resistance area as the VIX is in the support area. Now, unless things are going to be different this time, buying has not worked out well when we have this type of situation. Looking at the advanced decline, I mean, it's given nothing back. So we're at some of the most overextended levels that we've ever seen on the advanced decline line. And again, when it's up here, it's really, buying is risky because a lot of times they recycle and come back down to the lower end of it. And if that's the case, then you're going to be buying near the high. Take a look at the put call ratio here. Everybody's buying calls right now. Everybody's hooked onto this rally, expecting it to go higher. But the thing is that usually when everybody's lined up like this, it does the exact opposite. Now finally is this is the bullish percent, Now, notice how this has been going up, but we're not making new highs. So we do have somewhat of a divergence on that end of it. So right now, really, the way that I would look at this market is until the 2085 gets taken out and it stays out. The bulls are in control, so you want to be quick with your with your short trades. Now, if we head up, then you really could wait all the way up at the 2011 or possibly the 2016 or the next two resistance levels. And again, with these really deep divergences and overextended markets, it would not be comfortable being long right now and just, assuming that we're going to be heading higher, because we've seen this happen before, and once everybody's on board, usually you do see the exact opposite take place. So with that, let's see what plays out tomorrow. Enjoy the rest of your weekend, and I'll talk to you guys in the morning.